price to earnings ratio, you could call it. So right now you're seeing that the maximum HEX price per earnings is at 0.0068, which is still below 1%. And right now it's currently at what you would consider 1/10 of a cent, almost 2/10 of a cent, at 0.17 cents, basically, if you want to call it that, or tenths of a cent. If you look at a stock like Apple, you look at any stock, it's not going to be 1%. It's going to be a multiple, a factor, actually. It's going to be greater than 5 in most cases. It's a multiple of 13. It's not a percentage. It's a factor. So right now, HEX is literally below 1. Like, you guys literally do not understand how cheap HEX is, okay? This is the average earnings ratio for stocks since inception of the S&P 500 earnings ratio, which goes back to January 1st, 1871, and through February 1st, 2021 is what we're showing here. And I just want to highlight the low, all-time low, which is shown here to be basically during World War I. And that's at 5.51 times. So the S&P price was 5.1 times the actual earnings. That's what that's showing. That's exactly what that's showing.
Wow, dude. So at an all-time low, you were paying 5.5 more times over the earnings that you were getting. Is that am I understanding that properly?
Correct. We're in HEX.
Yeah, but you're saying to me that this HEX PE is showing us that it's less than 1%, though.
Exactly. Not even one time.
How is that even possible?
Because people don't know it exists.
Oh my God. Is this the greatest financial instrument on planet Earth?
Pretty much.
My God.
I mean, and here's the proof. Like, I can show this a million different ways. A real cryptocurrency doesn't need a marketing team, doesn't need anything. It just needs math to work. And that's a fact. You don't got to take my word for it. Just look at the chart. Because again, this is software and code. This is not a stock market. So if you have that common misconception, you're welcome. That is no longer true. You've been lied to this whole time. Bitcoin is not supposed to be like the stock market. So the fact that it looks like that is a problem at all. Very, very big problem. So these are the kind of things you'll never hear anybody tell you, because they don't want you to know that. They want you to keep thinking it's the same deal, but it's not. But again, like I was saying, this is crypto, okay? So the simple fact that it exists is all that matters. Market cap is irrelevant because people just choose to ignore the fact that that 21 million number is completely arbitrary. They could have picked 5. They could have picked 50 million. They could have picked 500 billion. Who cares? The market would settle out that value thereafter. Okay? And I guess I should have bought my price to earnings chart, but I can whip it up. It's fine. Just update it real quick for you guys so you guys can understand what's going on here, because people really don't understand. Market cap, entirely irrelevant. Because if I make a coin and I say there's going to be 1 trillion coins, then guess what? There's 1 trillion coins. End of discussion. Whatever the market deems that value per coin to be is another question. And in reality, when you're talking about a productive economic asset, there is no limit to what the price and the value can be. And this is why everybody gets HEX wrong. Everybody. Period. Even Hexicans get HEX wrong. I'm one of the few people that gets it right. And you know what? Given that it's been 10 months, I'm going to go on ahead and start saying that. Because it's still got plenty of people out there that don't know what they're talking about, even when it comes to HEX. And yes, they fucking own it. So, you know, it is what it is, man. A lot of people don't want to understand that this is just math. You know, your feelings are irrelevant. And when math works, the market is infinite. There is no market size. Because guess what? Consistency is something that asset allocators get. When two data sets are strongly linked together, we say they have a high correlation. And when they are not, that is the opposite. which means they have no correlation, right? Co meaning together, and relation. So how positively or how negative how negatively are they correlated, right? And it's really just a measure of 1 to -1. Okay, 1 to -1. Now they even have little pictures here to kind of help you visualize what it should look like on a scatter plot. Okay, so as you guys can see, when the correlation is and I got charts showing all this stuff, so don't worry, this isn't going to be the only place you're going to see it. Perfect positive correlation to 1 usually looks like this. High correlation you'll see looks like that. And these charts are pretty accurate with respect to what we usually see in data sets. So this is correct. So here's just giving you a representation of what it looks like, yada yada. But the whole story is, right, you just need to understand. Number 1, perfect positive correlation, meaning very high, right? The strictest, the highest it could be. 0, meaning no correlation, meaning it's all over the place and not linked together at all. -1 means they move opposite of each other all the way. All the way. So please internalize that. If you have any questions about that, let me know. Now, how do we read a scatter plot? Because that's the crux of what we're going to be looking at today. And that's something else I want you guys to know. This is cool. We can do this. Yeah, so this is pretty straightforward, right? It's kind of like what we already saw in that other chart. You know, positively associated, negatively associated, nonlinear, this is all over the place, right? And then the tighter the correlation, right? The stricter the range, right? That means by default that well, it actually highlights it right here. The stronger the correlation, right? So even though it trends in the same direction, doesn't mean it's highly correlated. So you need a couple of things to go down with that. And yeah, nah. So let's talk about this chart, because this is a very bad thing to say, and I'm going to explain why. So this number is a representation of the correlation between Ethereum and HEX since inception. Okay. So that means every data point on this chart is a representation of HEX and Ethereum. That's it. And the correlation, as you guys already know, because you just read the definition, is 0. Right? It's negative 0.005. So that means that while they might move in tandem for a few hours, maybe, they're not correlated at all whatsoever. Because when HEX did a 65% return, ETH did a negative 23% return. Or when HEX did a 175% return, ETH did a minus 5% return right over here. Right? So, you know, HEX is going to do its thing. Ethereum is going to do its thing. That's what this chart means. They do not follow each other. They do their own thing. And that's what's going on here. Right? So when you're looking at this chart from a big picture point of view, what you're going to notice is that the majority of the returns for HEX are primarily on the right side of the x-axis. Right? Primarily. This, right, is going to denote the negative performance all the way down to 50%, right? HEX had a minus 70% day, I guess you can call that day. Maybe 60%, hard for me to tell. But something like that. But the preponderance of the events is scant relative to the quantity you see on the upside, right? And this is what, when a person or an entity looks at this, like those institutional investors, they look at stuff like this, they're going to be like, well, shit, this is a no-brainer, because this is not what you usually see in these charts, right? You usually see some type of correlation, because all these markets trade together, right? I've shown this to you guys before. Now let's see. It's a good way to show this really quick. I don't think there's a quick way. Let's see. What markets? Yeah, you guys know this. When stock markets go to 1, when stock markets are dumping, right, what happens is that the dollar's going up and everything else is going down with it, right? This is common. If you've been around the markets a little bit, you've seen this before. So this isn't even anything new. This is just how it works. All right. So when we do that, so this dollar up, boom. All right. That's exactly the price action I'm talking about, right? See the market dumping. This is the S&P 500, and this is the dollar ripping, right? The orange line. The dollar just ripped in reaction to this because people started selling speculative assets and seeking safety of dollars, right? But then ultimately that fear dissipated and they started dumping dollars and buying risky assets again, and they've never stopped since. But yet lately, as of the summer of May 2021, they've been doing the opposite, which is it looks like they've been seeking the safety of dollars. Somebody has, even if the market's still going higher, right? Maybe that's just the Fed pumping the market, even though they're draining it on the backside, right? Via their reverse repo, where they're basically doing margin calls on institutions, right? And these institutions have to then come up with cash to pay the Fed back in order to cover those margin calls. And that's just what's happening, right? Whether it's in stocks, right? And this has been going on since April 1st, right? So it's no coincidence that the dollar peaked that day and then came back up eventually, because the markets have to figure out how to settle out that plumbing, right? That's just something that the market has to do, because people have to remember that the market is a value transfer mechanism. It doesn't just shift at the click of a button. It has to go through its motions as well. And just like at that point in time, in order for that to happen, the market was too expensive. So I had to reprice itself in order to recalibrate. And now we're making a move on higher, right? And we've reached that previous level, which I think was 93. Yeah, 93 and a half. And now we're well above 94, and we're going to probably stay there for a little while and probably breach new highs all at the same time, simply because it's time. The dollar has gone down long enough and the market has gone up long enough, right? And as you guys know, they already gave you a heads up. So take their word for it. They don't lie. So let's see. Let's go back to that. So yeah, that's a good representation of what happens, right? Market correlations go to 1. And as we see here, it's a strict correlation of 0. The trend is even flat, right? Flat to down. This is what this gray line is representing here. So this is how HEX outperforms Ethereum, literally, right? Every day, no matter what, right? No matter what. This is what's happening every day. HEX is outperforming Ethereum. But guess what? It's not just outperforming Ethereum. It's outperforming Bitcoin too. Same deal. Right? 170%, versus a positive move of 30%, 25% for Bitcoin, right? And these are the kind of things you got to look at. HEX primarily to the right side of the chart once again versus Bitcoin versus these few moves right over here. But when you look at Bitcoin, it's all over the place. It's not aggregated in a tight spot. That thing is all over the place. It's spread up and down. HEX is primarily grouped right here. That's a no-brainer. That tells you, a player in this game, that when they put their money down, they're going to make money at least 7 out of 10 times. At least, without giving that thing a close eyeball. Just off a very, very good look. Just, all right, I see these dots. All right, they're primarily over here. Okay. Bitcoin, that thing is kind of over the place. Because, again, Bitcoin, we're looking at Bitcoin from top to bottom, not left to right. Left to right, we're looking at HEX. Right? From left to right, we're looking at what HEX is doing, how HEX is sitting, and where HEX is going. Right? And HEX is all right here. All of this is HEX. All right, this is HEX over here on this side. And it's just so little, so very few dots there. Relative to this side, it's not even comparable. It's really not. And then Bitcoin, man, Bitcoin is just all over the place. Right? But then the fact of the matter is the correlation is 0. Okay? And that's it. That's it. Let's see, what's this? On a stake for a year right now, the HEX contract says that I will only get 20% interest. Will that go down as T-shares dry up, or will the 3.69 inflation keep it at 20% interest annually? All right, so the way it works is that you're paid out with respect to your T-shares. The yield or the APY that you see is going to be a function of what the market is paying out with respect to the T-share count and the T-share count in the pool that you have. So if you have enough that you're only going to get 20%, then that's what you're going to get. Pretty simple. The only way to ratchet that up is by ratcheting up your T-shares, because the market is going to pay out what the market is going to pay out with respect to the T-share count. It's not really the APY. So the more people that enter the system, the lower the APY is going to go, because that means that more people are going to end up becoming staked. So that's the price that you pay for virality, right? But at the same time, the value of the market is going to increase as well, because that means more people are buying and staking. And when people are staking, they're swapping out HEX for T-shares, right? So that HEX is disappearing at the same time. So that's even less HEX to be bought or sold until that HEX is then created again from those T-shares, which are then burnt, right? For the new HEX is about to be minted when it comes out on the back end, right? So until then, you only have your T-share count to combat with. The APY is going to be a function of the interest in the system, and you should expect it to go down from here, right? Because that's what virality is going to imply. It's not going to stay up here. It can't. Unless people are just buying and holding, which I highly doubt the majority of people are going to buy and hold. I believe that most people are going to stake it. So you got to expect it to go down. So right now, the APY you're getting, that's a function of two things. A, how long you staked for, and B, how many HEX you staked, right? Because that's what determines the number of T-shares that you get. But at the same time, that duration is going to, it honestly doesn't matter, because the way this coin is designed to work, it's going to always keep going up. It doesn't matter who's doing what. They, they can sell it for all what, it's not going to matter. Because guess what? Somebody's going to come in here and they're going to buy it because they understand that it works. That's all that matters. So as long as that continues to be true, two things are going to happen. The T-share rate is going to keep going up. And as long as the T-share rate is going up, the price of HEX is going to keep going up, because the T-share rate is always going to require you to buy more HEX in order to acquire a T-share. So in order for you to obtain those 5 HEX, 5 to 6 HEX, it doesn't even seem like a lot. Guess what? You got to pay the HEX rate. Period. End of discussion. Nothing further to discuss. I am sorry. Blame it on the code. It has nothing to do with me. But whether we have new entrants in HEX or not is irrelevant, because HEX is a benefit to society. Society needs HEX. It's not the other way around. I hate to be the bearer of bad news, but it's just true. The math doesn't care. Because guess what? I've been buying HEX since it was half a freaking penny. Half of a penny. It's at 42 cents right now. 42 and a half. So I was buying still. Bitcoin is 12 years old, going on 13. Okay? It's at $54,000. What is your rush? Do you think this is going somewhere? Like, we're here for a long haul. If you're not, I don't know what to tell you, but I got nothing to confirm. You know, I can't comfort you in any way. I got nothing to offer you. Your ass got to do the time just like everybody else. So sit your asses down and enjoy the ride. There's nothing else to talk about. I mean, this is very basic. You just got to wait. That's why we stay for 15 years. I don't want to get out when HEX is $50,000. No. I want to get out when I never have to. Because they just going to pay me. Just for owning HEX. That's what's going to happen. Because this is the one true testament to mathematics at its finest. And this is why these charts are so it's just magnificent. Look at these charts. I mean, come on. Let's go to the next one. All right. So this is against the S&P 500's ETF. Now, I'm using roller correlations because I want you guys to see how HEX reacts towards it throughout time. And I want you guys to see what it looks like when it's changing over time, right? Each color represents a day count, right? 21 days in blue, 34 days in orange, 55 days in gray. HEX is in this yellow color, gold, whatever, right? And as you guys see, this is just regular HEX on the right side. Boom, right? And the correlation going from 1 to -1, right? With 0 here at the middle. Now, the whole thing you have to understand is when we were looking at those charts earlier, right? You could see that everything had a direction, a unified direction when it was correlated, right? It just stayed in one area. It didn't go all around like this. So this is clearly not correlated, right? I mean, even without having to look at a scatter plot, which I do have, it's obvious to see that, right? Very obvious. So when you look at the correlation between HEX and SPY, guess what? 0. How about them apples? Now, you guys got to understand. This is a grade A asset because people don't even know that this exists over there. And they would kill for this. People on Wall Street would kill for this. Literally. So then you would ask, well, why don't they just invest in it? Well, because they don't know it exists, number one. Because believe it or not, there's nothing they can do about it. Right? If they're not being told by somebody, then there's just nothing they can do. That's it. Right? And then on top of that, there's regulatory aspects that they have to take into account. Like if you're a hedge fund, even if you're a hedge fund, you can't just buy. Because if your capital is tied up in a certain way, then you're just stuck. Nothing you can do. And you're done. And that's it. Okay? So there's a lot of reasons why institutions don't just come in and buy. There's not the liquidity. That's actually irrelevant. Because guess what? They'll push that market up. They don't give a damn. Because if they really understand it, there's nothing to talk about. And I've already explained it to all of you guys a million ways of Sunday. They're not even looking at that. So that's pretty much that. So here's proof positive that HEX is designed to perform not only better than the S&P, but cleaner than the S&P. Just no correlation whatsoever. All straight zeros across the board. All these positively sloped returns, right? Positively skewed returns. Minimal to the downside, as always. And then S&P is just the same nonsense year over year. And this is just since HEX has existed, okay? All these data points are just as long as HEX has been around. So I'm just correlating everything to how long HEX has been around. That's it. That is all. What mask? So the Aspire S&P 500 returns. S&P 500 ETF. So look that up. S&P 500 ETF. All right, so this is the Q. Now the Q is the NASDAQ 100, right, which is the technology stocks. And again, rolling correlations just to show that there is no correlation because it doesn't stay constant to one side throughout time. And that's how you know it's not correlated, because it must do that in order for it to remain positive or negative. It can't be both. It must be either or in order for it to be either correlated or not correlated. And that's it. Okay, so as you guys can see again, 21 day, 34 day, 55 day. And again, they're just moving out through all time. Okay. And again, zero correlation, right? And the returns for HEX are positively skewed again, as always. Very little negatively skewed relative to the positive. And then the Qs are just all over the place, right? They're just all over the place. And it's just a tight group, But of course, HEX has just more on the positive side. And Qs, man, they're just all over the place. I mean, and this is just well known to go up and to the right, and that's it too. But it just doesn't even look that. Yeah, no, there's too much negative to the downside. And this is just the past 700 days, so that's crazy. The past 450 days, so that's crazy. That's a lot of down. Now, this is gold ETF. Now, note, same deal, right? 21, 34, 55. And they all are not constant and they vary throughout time. Letting you know, no correlation. And guess what? 0.0018. No correlation whatsoever. Simple. Again, HEX over here. A little bit over here. Gold all over the place. And we already know gold is suppressed and all of that. So we don't even need to get into that. I just want to show you guys how HEX just outperforms everything. Right? Literally. And not only does it outperform everything, but it's completely decorrelated from everything. It just does its own thing. Okay? Gold futures. Same deal. Right? You look at gold. Look at gold futures and they look pretty much the same. Gold ETF and gold futures look pretty much the same as far as the correlations go. That's because they're basically the same instrument. So there shouldn't be much variation. If anything, they're just structural into the markets that they just respectively are. And that's all. So as you can see, there's a negative slope versus a positive slope for the futures. And that's just because of how the futures trade. It's really nothing else. Right, but it makes sense for fiat to be negative, right? Because it's constantly losing value, and that's what should be happening. So, makes sense. And again, though, zero correlation, right? This is what it's about. Just same, right? Same as always. And that's all. That's all we can ask for, right? All we can ask for is positively performing productive economic assets. And I tell you what, a zero is better than a negative every day of the week. Now here we got crude oil futures. And as you guys know, crude oil is used in a lot of things, if not everything, right? It's basically the base of petroleum. And petroleum goes into plastic, and plastic goes into all kinds of stuff all over the world. So basically it is for everything. So yeah. And again, we got 21 days, 34 days, 55 days in blue. And the price of HEX, right? And then everything is just all over the place, showing us no correlation, right? Which is what we want to see. And again, that's what we have here in the scatter plot. And I mean, this is probably the craziest one out of all of them. Yeah, I mean, crude is just that thing, right? I mean, it's been on a tear lately, so it's gonna be pretty like doing its own thing compared to HEX, because HEX is already doing its own thing. So this isn't gonna move like everything else because it's crude, and crude is just being pushed up high right now. So it's just on its own thing, its own world right now. And that's all we got with crude. But interesting chart nonetheless, because you had these big downward spikes, right? Oh, I mean, this is crazy. So this is a crazy move, right? And so is that. And again, this is for crude. This is not for HEX. That's for crude. So yeah, some crazy stuff going on here. And this is what happens when you paper over a commodity market, right? You get crazy moves like that. That's not a regular move. That makes 0 sense. That should not be happening at all whatsoever. Imagine if the cost of bread went down 300% and then it went up on you 12,000%. How would that feel? Like, that's just ridiculous, right? So that's why we buy productive economic assets. We don't got to worry about nonsense like that that's papered over, right? We can just be decorrelated and just enjoy life. And here is HEX versus the US dollar. And again, no correlation, right? Wow, I messed that up. I didn't even notice. Anyway, but yeah, no correlation, right? Up and down, nothing constant throughout time. And that's what it's about. And as you guys can see, a bunch of zeros and a 5 again. And this is just, again, just outperformance, man. Just outperformance again versus the dollar, and no correlation as well. I mean, come on. This is just crazy, right? This is just crazy. This is just crazy. The dollar can't even keep up with it. All right, the dollar. All right, here we got copper. Again, same deal. Just can't keep up, right? It's just doing its own thing. HEX is just up and down, up and down, up and down. And that's it. The correlations are up and down, up and down, up and down. I mean, sorry. 21 day, 34 day, 55. Copper versus HEX. And yeah. You know, 0 correlation as always. And HEX is just doing its own thing as always, and copper is just all over the place. I mean, I don't even know what to tell you guys. You know, it's up, but it's down too, right? It's a volatile instrument. So you gotta be careful with this one. I've traded it before. It's a wild one. It's a wild one. When you catch a good trade though, I think we'll do you some work. It will do you some work. I'll tell you that much. All right, here we have US 30-year futures contract, which is the representative of the interest rate at the long end of the curve, which is about the same duration as the max for HEX, 15 years. And again, just no correlation whatsoever, right? No trend up or down, just all over the place. And the price just does its own thing. 21, 34, and 55 days again. And this is just, you know, HEX doing this thing once again. 0 correlation. You know, these are all assets that people trade every day, right? Trillions of dollars trading all these assets every day, guys. So there's a reason I'm going through all of these, right? I mean, HEX trades so much better than all of them. That's what these charts are showing you, right? None of these assets go up and then sideways and then up and then sideways. None of them. None of them. Not a single one. Not a single one. That's important to understand, because that's what separates HEX from everything else. Now, here we finally hit one where you're seeing how a positively correlated relationship looks like. What a positively correlated relationship looks like, okay? And that's what happens when the lines stay to one side of the chart, as you guys can see. Now, it'll break, right? But it'll always come back. It'll always come back. And that's what it called positively correlated. Okay? That's positively correlated. So simple. And here we go again. Now, this is HEX versus T-shares, right? And this is, again, as we saw on the internet earlier, when we were looking it up, positive correlation. It looks just like that. And here we have 0.70, basically, 0.6953, right? That's positive correlation. And we saw in the other chart what it looked like, right? Now, that's all time, right? All time rolling correlations between T-shares and HEX and prices, okay? Dollar costs. And this is the scatter plot chart. Now, this is a representation of the returns, right? So the representation of the returns are such that they're just lockstep, right? Like they're always landing in the same area. I mean, this is pretty phenomenal, right? You don't see this every day at all. Like this is a freak event. So this brings us to this chart. Now, this is the chart that lets us know what's about to happen, because this chart is letting us know that no matter the duration, whether it's 21, 34, 55 days, correlation for HEX is 1, right? And I highlight the longest term because it's the strongest one. But at the end of the day, it's all the same. And what's going to happen is that this is going to just give us another one of these moves, right? Because this is what it does. It's designed to do that because it has to follow its value proposition, right? And this is the payout per T-share sum line, right? And this line is always up and to the right. And guess what price is doing? It's following it. That's not a coincidence, folks. That's by design. And you cannot debate that at all, period. I don't care who you are. You cannot, even Richard Hart himself cannot debate this, because there has never been anything like this. First time. So you have to understand what's happening. Period. Because while we're going sideways, guess what's happening? We're building value. We're getting paid. Nobody's losing. Nobody's eating. Nobody's starving, shall I say. Everybody's eating. Nobody is at the table not getting paid. That's powerful. We are the embodiment of abundance here. Very critical to understand that. Every time the clock rolls over at 0000 UTC, this chart ticks up, meaning value is being built, meaning we're winning no matter what. Price can go sideways all it wants. We're getting paid every day, period, regardless. Nobody else can say that. Nobody. Nobody. Nobody gets paid every day. Nobody, folks. Maybe some drug dealers, but that's it. Right? But even them, that's not going to last forever. Right? At the end of the day, getting paid. Nobody else can say that. Right?